Yeah, good morning, everyone. Welcome to today's live trading session. Today is Monday, May 16th, 2022. And what we're going to do, we're going to look for a few day trading opportunities. I couldn't really find too many on my radar that I'm pretty much confident in. But what we're going to do, we're going to go over a few examples in a little bit. But before I do that, I first want to mention that deciding to test out something new and fresh. I'll probably go over it in a little bit, maybe later on, but it's a new approach that I'm actually been doing a lot of back testing on, and it's been doing pretty well. I don't know if I have time to go over it today, but we'll definitely take a look at it soon. But anyways, let me go to the first pair. The first pair that we're going to look at right now is the Euro Swiss Franc. So let's do that right now. Euro Swiss Franc, and I got to go to the 1 hour. So let's do that right now. Euro Swiss Franc. Right there. All right. So right now we're looking at the Euro Swiss Franc, and we're currently looking at the 1 hour chart. Now, let me ask you guys this question. Based on what we're seeing right now, what will you do? Now, this is based on our original momentum strategy. What will you do right now? Would you look for an opportunity to buy or sell? So I'll give you guys a few seconds to chime in, and really, it all depends on what style of trader you are. Because some people, they're counter trend traders. They trade counter to the dominant market move for that particular day. But okay, yeah, Robert said buy, Adam said buy Euro Swiss Franc, and yeah, we'll be looking to buy a dip. It's pretty apparent. We see that price is making, higher highs, higher lows, higher highs, higher lows, and a higher high. So what we want to do is trade on that side of the market. We want to trade where momentum is at the moment. And at the present moment, momentum is to the upside on Euro Swiss Franc. But before we do that, we want to see if there is directional confluence. We want to see if multiple opportunities support a move to the upside. So then we got to look at multiple time frames. We typically look at the 1 hour, the 4 hour, and the daily, especially when it comes to day trading setups on the 1 hour time frame. We'll look at those particular time frames, 4 hour daily in conjunction with the 1 hour. So what we're going to do, we're going to go to the 4 hour. Let's see if that has a bullish environment or bullish bias. And as you can see, it sort of does, even though the 20 SMA is sloping to the downside. Price broke above this structure area right here. You can look left. You can see that structure leads clues. It broke above this structure area right there. So then, to me, we're in a bullish environment, and price pretty much hit the highs or tested the highs up here. Pretty much broke above this recent high. So to me, we're in a bullish environment on the 4 hours. So 4 hours looking bullish as well. And the daily chart. Daily is obviously bullish as well. You can see price was consolidating. We had the breakout, pullback, and price is pushing to the upside. So what we want to do, we want to look for opportunities to buy now, since most time frames confirm a bias to the upside. So what we're going to do from here, we're just going to simply draw out our Fibonacci. I'm going to take it from this low and draw it all the way up to this high. We're going to do what is called a Fibonacci retracement. So yeah, and before I did that, I should have asked, for one, look to see where we would look to buy, because we typically want to buy at support, right? So what I'm looking at is this area right around here. Let me drop a line so you could see it right, maybe around, yeah, here. This is good enough. Right around here. Let me change the color of that. So right around here is where I would potentially look for an opportunity to buy. Really is a zone in this area. Let me define this zone right now. Let me get rid of this one. and is really from the midpoint of this congestion area, you could say, right here, all the way up to where this yellow line is. That's the zone that I'll be looking at. And we can see that there's confluence even with this high and, this area right here, a lot of confluence in this area. So let me just draw out this zone right here maybe do it from here all the way up to where this yellow line is right here. So for me, somewhere within this zone is where I think price can go, but I may just drag it out to the 61.8 just to play it safe, because oftentimes price wants to test the 61.8, and if you look at the chart, if we zoom in, we can see that near the 61.8 we have the 20-hour moving average and the 100-hour moving average also. So price can actually push all the way down to this area and then pop higher. But what we're going to do is simply look at an area to buy, or look to buy in this particular area. So again, oops, let me do this. I should not have kept this up here. So yeah, what we're going to do here, we're going to place a marker at the 38.2, and we want price to notify us whenever we hit the 38.2 level. So then that's what we want to do. We want to be notified. So again, let's place this alert right here and say crossing horizontal ray. Okay, and we could put the date. So the date is May 16th. Oops, May 16th. Say price testing 382, price testing 382. Drop down to trigger 382. Look to buy on confirm. All right. So yeah, if we see price test this 38.2, that we'll be notified, we'll be alerted, and then we'll drop down to our trigger. And what we're expecting something like this. Let me remove it. We're expecting price to, of course, push to the downside into this area of structure, and look left, structure leaves clues, push down somewhere within this area, and then from there we're going to look to buy on bullish confirmation. And we can have two highs. We can actually have two highs. Let me for one draw out where I think price can go based on how we approach the market on a number of occasions. But yeah, what we want to do is actually look for an expansion higher. So right around here is if price does go to this area, we'll look for a possible move of this length or this distance, to the upside. So let me measure how many pips is that. So that's about 40 pips, you could say. So we'll be looking for a 40 pip move to the upside for the most part. But let me place this marker right here, change it to green because it's a buy signal. And yeah, that's what we're looking for, guys. We're looking for this buy on Euro Swiss franc for about 40 pips. And we don't have a target yet because, of course, as you know, the pullback is not complete. But we'll be targeting around 40 pips on this particular move from the swing low that will be created. So yeah, so we'll see. But we just have to wait for price to get down into that particular zone in the area, and then pretty much go from there. So yeah, are there any questions? Going once, going twice. All right. So with that said, I guess we can do one more setup. This one will be on the CAD Swiss franc. So let's go there right now. Let's go to CAD CHF. And what we'll be looking for is another buy opportunity. But as you guys can see, price sort of well, we don't know how price is going to move. Price could actually pull back a bit, but we're definitely in a bullish environment. We can see that price is making higher highs and higher lows. You see that higher high, higher high, equal low, then higher highs, higher lows. You get the point. But price is moving to the upside, and we need to look for an opportunity to buy on a nice pullback in price. And for this one, I want to treat this. There's two ways we can approach this. We can approach this as a pullback trade where price pulls back to a certain level, and then we look for a buy, or we could approach this as what you would call a breakout trade. But for one, let me, of course, well, let's look to see if there's directional confluence before we do anything. Okay, so let's go to the 4-hour chart. Let's see what the 4-hour chart is showing us. All right, so 4-hour chart is giving us a bullish environment right here. You see momentum to the upside. Also, on the daily chart, daily is pressing or pushing to the upside, expanding higher. That's giving us a bias to the upside. So we're definitely in a buyer's environment, a bullish environment for this particular pair. And what we want to do is wait for that buying opportunity to set up. And it could set up in two ways. For starters, we can see a pullback to this structure area right here. Let me just draw this in. Look left, structure leads clues. We can see price pull back to this area and then pop up, forming what we all know to be the infamous almost inverted head and shoulders continuation type setup. And then we can see price push to the upside. So then that's something that could happen. So, one way is to wait for price to pull back here and pop up. But we also have another way this can happen is if price breaks and closes above this structure area right here, which it looks like it wants to do now. If price breaks out to the upside, then, we'll look for a break and retest type strategy. In other words, we'll be looking for price to break and then for a pullback to retest this area as support. And then, we'll look for a buy. But yeah, that's what we'll be looking for. So there's two ways. Either price can pull back to this zone and we can look for the buy here and, trade this to the upside, or we'll wait for the breakout, pull back, and then look to buy. So again, there's two ways this could work out. And with the way price is moving right now, it looks like it may want to break to the upside. So yeah, we'll see what happens. But in either case, we're looking to buy. So for this one, we'll just wait a while until we get exactly what we would want to see on this particular pair or setup. But yeah, this is the CAD Swiss franc. And really, that's all that I have for now. I don't really have too many day trading setups for now. But what we can do right now is transition. It seems like a lot of currencies are just trying to figure out, what side of the market to be on, to be honest. So it's kind of hard as far as currencies go, but we may find some opportunities in stocks. We may find some opportunities in certain commodities. What we need to do is take a look at gold. I haven't looked at gold yet or silver yet this morning, so we can probably cover that later on. But for the most part, when it comes to currencies, there's not really too many opportunities right now. So we have to wait for the setups to align and perfectly form. But what I'm going to do is pass the mic over to Marvin, and he's going to talk about what's happening fundamentally and do all that intermarket analysis stuff. Yeah. So so then pretty much what Melvin mentioned, as far as even in the currency market, we're not really seeing a lot of conviction and follow through or even clear defined signals of where currency pairs should be trading for this pre-US trading session. But one thing we do know is that if we look at futures markets, we can see that futures are slightly in negative territory, but they could be unwinding and could be moving higher. So then what I'm going to do, I'm just going to pull up just well, let me just do this first. Let me just go to the S&P 500 E-mini futures so we can just take a look at that. So we can just kind of see how it's been moving. And I'm just going to go to the daily time frame so that single candlestick right here can show that it's currently below its opening price. We can see that it's trading in negative territory about 13.75 points lower than last Friday's close. But we can see this, and then let me just pull up, another window, and I'm going to do the Dow E-mini futures right here. Dow E-mini futures, and let me go to the daily time frame right here, and we can see that it's a negative day as well. It's down about 40 points from last Friday's close. Of course, it gapped higher. It gapped slightly higher, went up, and now, of course, it fell low all the way down, formed this low where we see this wick is, and now it's pulling up. So then it's not too far from its opening range or from where it gapped to the upside, which could also clue us in on the possibility of this risk off scenario, this risk aversion unwinding, and we can see possibly some risk appetite set in or some positive action. So then, but let's go to the NASDAQ E-mini futures right here and the daily time frame, and we can see the same thing. So then across the board, our three U.S. major indices, where the futures indices are trading in negative territory, and they slid, they formed a fresh low where this wick is. I don't know if you guys can see that, but you can see it clearly on the NASDAQ E-mini futures. You can also see it on the Dow E-mini futures, and somewhat on the S&P 500 E-mini futures. But you can see that it formed a wick. So there was a part of the session where it was trading really far from its opening range. We saw a lot of risk aversion, a lot of safe haven flows, and it did trade a lower and negative territory as if it was going to test or retest the lows of last week. For today. And of course, there's a reason for that, because there's a few news headlines that are sort of driving sentiment at the moment, and it's also keeping sentiment kind of mixed. There's a lot of ambiguity. We don't know really how to approach this new information. But on last night, what's really driving financial assets right now is the news coming out of China. We had a series of data that came out of China that was really atrocious, that really revealed that they're going through a period of very soft patch in their economy. And you got to also, realize that if you lock down your economy for like almost it's been weeks, like almost 2 months, where they've been locked down. It was supposed to be 3 days of them being locked down in Shanghai, but then it extended because China has a zero COVID lockdown policy, or zero COVID policy, where they can't get one single case of COVID anywhere. And if they do detect a single case, then they shut down the whole city. So we know that Shanghai been shut down for some time. Shenzhen been shut down, but now Beijing is sort of shut down. So then, of course, when you're shut down for that long, that's going to definitely hurt domestic demand. It's going to hurt the economy, as a lot of spending and just business gets shut down simply because everybody's quarantining and locking in place, and there's no one going out. So then, what we saw yesterday, let me just type this in. Let me just do this. Let me just type China retail sales, and then there's also industrial productions. Okay, but if we was to look at any one of these articles, you can see how bad the retail sales was. So I'm trying to see which one do I want to go to, because April retail sales came out very, very poor. It dropped by 11.7%, which is definitely going to impact their growth, because retail sales is a huge part of the whole consumption component in the GDP equation. So then when we see a drop in retail sales like what was reported,
That's gonna definitely hurt their economy. So then, I don't know why this is looking like this. Okay, we may have to go to another article, another site. But let's do this. I know CNBC. Okay. So yeah, so it says right here China's economic data disappoints in April as COVID controls way. And we all know what the COVID controls were. They were pretty much the lockdowns in Shanghai. So then we can see here that retail sales fell by 11.1% in April from a year ago, more than the 6.1% decline predicted in a Reuters poll. So then it fell well beyond its forecast and expectation. And we saw, or the numbers came out to show that retail sales contracted by 11%. But not only that, the Chinese industrial production dropped by 2.9% in April. And also the urban unemployment rate in China dropped. Well, it actually rose to a new high of 6.7% in April. So then there's a slew of data that came out of China overnight that added to some of the negative risk sentiment that began to exacerbate the sell-off in US futures, because we have to keep in mind that China is like the second largest economy in the world, and when China sneezes, the rest of the world catches a cold. So then of course any slowdown in China will also have contagion effects and actually drift over into impacting growth in other economies. If there's a shutdown in their manufacturing, if there's a shutdown in any business. And we got to also keep in mind that Shanghai is the financial center of China. That's going to definitely hurt global markets and global economy. So then, of course, right now we're seeing markets sort of trading off of that news. We're seeing some of that negative risk sentiment impact US futures markets. But just like we're seeing in these charts right here, it did test the lows, but it seems as if it wants to pair those losses and actually trade higher. And if we can look right now, the S&P is only 7.75 pips below last Friday's close. So it seems as if it's gaining traction. It wants to move positive for today, so that can be a good sign of where markets may want to trade as we move throughout today's session. But we got the news out of China, but we also got some headlines from Goldman Sachs, from their CEO, just from their analysts, saying that they're going to definitely drop or reduce their growth forecast for the US for both 2022 and 2023. They went through an update and they actually lowered their growth forecast, and they shared why they were going to do that. But then all of this was weighing on markets overnight through Asia session, through European session. And right now we're in a US session, and you can see here that markets are still trying to find its way for this Monday morning. So then Mondays are typically lower liquidity. They're more thinner markets. All of the action really begins on tomorrow, on Tuesday, because for this week, this new week of trading, we have a slew of economic data coming out. And let me just bring up the calendar. Let me just go to investing.com, invest.com, and then we're going to go to their economic calendar. Okay. So let's do this right here. And let's scroll down. Yeah, but there's a slew of data coming out this week. Let me just go to the weekly right here so that we can see. Because really, right here, as you can see, last night we had this horrible data come out of China that really impacted risk sentiment. But if we scroll down, this is Monday. Like, Monday is a light day. We don't have too much important information coming out. We did have housing starts for Canada come out, and we could see that housing improved by 267.3 thousand jobs. That those were actually, the construction projects were started. This was greater than the forecast of 246.4 housing start. So then this is providing a tailwind for the Canadian dollar. And I know that was one of the positions Melvin analyzed earlier. I think it was CAD Swiss Franc, right? Where you analyzed it, and we saw that CAD or the loonie was strengthening in comparison to the Swiss franc. But let's move on down. We have New York Empire State Manufacturing Index coming out in 1 minute. This is definitely just an indicator, give us an outlook on the manufacturing activity in the Empire State or in New York. So then that comes out in a little bit, but it's not too many first tier data that's going to really influence price action that's going to come out this morning. But on tomorrow, we will. On tomorrow, we have a slew of data coming out. We have from the pound, we have all of their labor market data coming out for Britain, Great Britain, the British economy. We have a lot of their labor data, and we're definitely going to be paying attention to that, since they're seeing signs of stagflation there, where they're slowing growth but also rising price pressures. They're experiencing the same thing we're experiencing here in the US, but I think even possibly worse. I know Joe from the UK, he could probably chime in on that, but I know inflation has been hot. I think they're paying about like $10 per gallon for gasoline, or for at the pump. But yeah, he can he could chime in if he's still in here and clarify that. But yeah, like this labor data is definitely going to have an impact on what the Bank of England does to help kind of pick up growth, to stimulate growth in the economy, but to also help tame inflation. We know that's one of the mandates of central banks is always to maintain price stability, to help deal with inflation issues. So then it's going to be interesting to see how the Bank of England navigates both a slowing economy where economic growth is slowing down, but also in pricing pressures brought on by inflation. So then that's going to be important. We're going to definitely look at that. But let's move down. But on tomorrow, we're going to actually have core retail sales, and that's really the chief data print that really it's going to really drive markets this week, that markets is going to focus on this week. And the reason why, and I posted it in the group, is because for US stocks, we have all of our retailers that's going to deliver their earnings reports this week. We have Walmart, Kohl's, Target. They're going to be releasing their first quarter earnings and revenue data. And of course, this is going to be done the same week that US April retail sales are actually released as well. And we know that retail, that's a major engine in the US economy. That whole aspect of consumption, that also plays a part of growth. So it's going to be interesting if we're going to see some of that, some headwinds in retail sales, if we're going to see a slowing or diminishing of retail sales as the price of goods in some of these retailers, or the price of goods in these stores, go higher. So we're going to be looking at this to sort of assess how consumer spending behavior is, even in the midst of an inflationary cycle. Even when pricing pressures are moving up, are we seeing retail sales maintained? But yeah, like I know well, I posted it in the group, but yeah, you guys can see the calendar where we got a few retailers coming out: Kohl's, Lowe's, Home Depot. They're gonna all be coming out this week, and this is the week where we're gonna get this important data. But this is definitely going to impact the U.S. dollar. It's definitely going to play a part in what the Fed decides to do when it comes to their tightening of monetary policy, their tightening of financial conditions. They're trying to drain the market of all of that excess liquidity that they pumped in over the past few years. So then this number is definitely going to have an impact on that. But yeah, like there's a slew of data coming out. We have industrial production numbers. I know on Wednesday we have housing numbers, housing starts numbers. We have Reserve Bank of Australia, monetary policy meeting minutes. There's a slew of data coming out, Japanese GDP data. But just like we tell you guys, like you don't need to know when these like you don't need to know everything about these particular reports. If you just really focus on the technicals and have a more um, responsive trading strategy, where you respond to the news, where you can identify when these different reports are being released, but yet you're not trying to deduct and assess what that means for the currency, but you're looking at price action, at raw price action in real time, to sort of figure out what you need to do with your trading strategy. Because you got to keep in mind, like with fundamental analysis and intermarket analysis, oftentimes it doesn't really make sense. There's things that take place that are pretty much don't make sense to people that understand economics. It's kind of like why, why is the US dollar selling off when inflation is higher? Just, a lot of things that, we see that can be conflicting from what you were previously taught or what was textbook economics. So yeah, so then we have a slew of data coming out. So it's going to be a very eventful week this week. This trading week, a very eventful week. There's a lot of event risk. So then we got to exercise caution. We got to exercise or use good risk management. And, we just got to trade what we see, trade based on those pure technical clues that we see in price action. But yeah, that's pretty much it for the US economic docket. What I'm going to do right now, I'm going to go to FinViz so we can get an idea of what is the market sentiment. We're going to look at that heat map. As you can see, this is last Friday's close. It closed strongly in positive territory. We can look at this sector and we can see that most of our sectors, let me just do this real quick. Most of our sectors on last Friday were trading in positive territory. That was actually after having such a horrible week where we began to see lower closes in the day and stock market sliding. There's a little bit of profit taking on Friday, and we saw this renewed relief rally come in at the end of the trading session. But yeah, so we see that the stock market ended or closed positive on yesterday, but how's it going to open today? And we see that right now, just like we talked about earlier, it seems as if it may want to rotate higher. We may want to trade a little bit higher. And the reason why I'm saying that is because this was deeply red. We saw it deeply sell off. I don't know if you guys saw the post that I put on last night where we saw futures markets in negative territory, about 200 points lower. The Dow was 200 points lower, but now it's about 35 points in positive territory. It's actually positive right now. So this lets us know that there's this this desire for yield, this rotation into value-based assets, because the Dow is more of our traditional blue chip index, where we get a lot of our traditional staples like IBM and Ford and just different companies, 30 core traditional US companies that are in this index. And it's just a safe place to put your money in value. But we can see here that the Nasdaq is still, it's moving higher, but it's negative 24 points, lower. And that's because it's a tech stock. It's pretty much a growth index, and they really don't do well when there's rising rates. When there's talk of rising rates, when treasury yields are moving to the upside, which they are this morning, we typically see the Nasdaq affected by that. But you can look at Dr. Russell, and Dr. Russell is right in neutral territory. And if we look at Dr. Copper right here, we can see that, of course, it's finding a little bit of demand, and it's moving in positive territory as well. So this should definitely impact the Australian dollar. I know the Aussie definitely was crushed the last night after the Chinese data came out. So then let's just look at that right now. We go to the Aussie yen here, and then we could see, let's just go to a smaller time like the hour. You could see how even on last night right here, it just began to tumble lower. Like this was a strong sell-off in the Australian dollar on that Chinese news that came out in the very late Asian trading session. But you can see here how it has recovered. It's bounced from this area of structure here. Look left, structure leaves clues. You can see all of this conjunction, which indicates a zone of supply or an area that price could find a bottom or move higher from. And we can see that it's been pretty much paring back those losses. It's been trying to move higher. So then we know that Australia is a miner's economy. So then, what we see happening in China with the lockdowns, with the slowing down of their economy, that really dampened Australian exports to China, which would traditionally weaken their currency. So then for the past few days, the Australian dollar has been weakening. Let me just go ahead and delete this. The Australian dollar has been weakening and sliding lower due to lower demand for their commodities. But we can see right now that it seems like it wants to recover. It wants to move higher after being, oversold. And there's a possibility that now with China announcing the slow reopening of Shanghai, that we're going to see, a resurgence of the Australian dollar, and it won't be under pressure as much. But we will also see a lift in iron ore and copper. Let me just do this right now. I think it's HG copper futures. We may see that, begin to move higher and gain some strength, as we can see here. That's going to definitely be a tailwind for the Australian dollar. But let me go to the iron right here. I think this is iron ore right here. And let me go to the daily chart right here, and then go to iron ore. And we can see here, this can be kind of confusing right here, but let's go to the line chart. Yeah, but we can see here that iron ore is sort of stabilizing. It pulled back some, it dropped lower. This also put pressure on the Aussie that began to sell off, but hopefully we see a double bottom form, or a resurgence or a continuation, resumption of the trend to the upside. So that's with iron ore. But so yeah, so let's go to the Forex heat map right quick. Let's see what's happening in Forex. So then we see right here that the two, or the three strongest currencies are the euro, the Japanese yen, and the US dollar. These are funding currencies because of the well, I would say the euro and the Japanese yen are, because they're low yielding. But the US dollar is sort of still like a safe place to sort of park your money. Every transaction around the world, even transactions that don't involve the US economy, or don't even, like, it appears as if it doesn't involve the US dollar, but in many ways it does. Like, even in currency trading, you can trade a pair that does not even have the US dollar in the base currency or the counter currency of that notation, but it can still pass through the dollar as those two economies change money or exchange funds. So then the US dollar is heavily involved in business. It's the world's reserve currency. So then every nation has it in their central bank reserves. So yeah, sometimes it's just going to benefit just from, just from being a reserve currency. And also the US dollar is, the US economy is one of the stronger economies in the world. So then when there's no other alternative, you trade the TINA trade. You remember TINA, what we talked about a few weeks ago? That's an acronym for there is no alternative. So sometimes when you're in doubt, and and there's no alternative, when markets are confused and there's ambiguity, then it's always a safe bet to trade the dollar, to trade the higher. But we can see here that the euro and the yen are moving to the upside. And we can see right here that the Aussie, the Canadian dollar, and the Swiss franc are the weaker currencies for the session, but they can also be picking up and moving to the upside. So so yeah, so then that's with that. Now with cryptocurrencies, we see cryptocurrencies is resuming its tumble lower, which is pretty interesting. I think, well, let's just go to the actual chart. Let's just do BTC USD. Let me just do Kraken right here. Okay, and we can see here that well, this is the line chart. And while I'm at it, let me just point this out. Like, for some of you guys, if you guys are having a hard time identifying support, resistance, swing points, you can also go to your line chart and you can identify these, maybe even a lot more easier. You can identify where these peaks are, where the prices tend to close. This is where these peaks are, and usually that's a good area to either plot as your targets, or areas of support and resistance, or where to place your stop loss. You want to place it around these swing points and execute your trades around these swing points. But if you're having a hard time identifying support and resistance zones on the candlestick chart, then you could always go down to the 1 hour chart. I mean, not the 1 hour chart, but the line chart. and you could just see where these swing points are and identify them, and then see if they agree when you go back to the candlestick chart. But yeah, let's go to the candlestick chart right now, and we can see here that for the day, it's moving lower. Bitcoin is dropping lower. It's now below the 30,000 handle. So we'll see. It may try to retest these lows down here and fill this wick, but only time will tell. One thing we know is that cryptocurrencies across the board have been getting heavily hit from the Terra, the Luna situation with the unpegging of stablecoin, the US dollar from it. So then, yeah, we're seeing Bitcoin suffer as a result of that. But hopefully what we see happening in equities may I'm hoping that it may help to encourage, Bitcoin investors to go long. But if it doesn't, oh well. I'm not in any Bitcoin or any cryptocurrencies. I'm completely scaled out. And yeah, just trade. Actually, if I'm going to trade it, it's going to simply be as a tradable instrument, not an investment asset, or an asset that I hold on for dear life, or hold on until I see it regain the highs up here again. But yeah, many of the apes are still in it. Like many of the apes, like the Planet of the Apes, they're still hanging in there, still you know keeping their fingers crossed, hoping that Bitcoin would continue its rally to the upside. But yeah, we'll see. We will definitely see. So then, yeah, but that's pretty much it. This is a Monday morning. I don't have much to share, but I think Melvin has a few day trading opportunities that are forming. So then he may want to talk about that, and also some top down analysis to go over. So I'm gonna pass the mic back over to him.
All right. So what we're going to do before we even look at some of the new stuff, we're going to review the setups that we did talk about. Let's go to the Euro Swiss Franc on the 1 hour. Let's see how that's looking right now. The Euro Swiss Franc. All right. So right now we're looking at the Euro Swiss Franc, and we're currently looking at the 1 hour. It looks like price may want to continue pushing higher. We didn't get triggered on this alert right here, so then we're not actively looking at this setup now. But we'll see what happens. Once price hits this level right here, or hits this area, we'll get a better idea of what may be potentially happening. But for all we know, price could be in preparation for a slide lower. Who knows? Yeah, these markets have been moving quite funny lately, so we never know. But yeah, this Euro Swiss Franc still has to come down to our area and get triggered. Let's go to the CAD Swiss Franc. All right, CAD Swiss Franc still maintain this high right here. Price didn't break and close above it yet, so we could still see price fall back and correct correct lower into this zone, and then potentially see a buy opportunity form. So that's something that we're looking at right now, but we don't know. Price could also very well be on its way lower as well. It could be in the middle of a rotation as well. So then that's just something that we need to bear in mind, that price could be rotating lower, and it may not give us an opportunity to enter a buy. So then this is the reason why we always buy on confirmation. Whenever price reaches a zone, we never enter a buy. We always wait for confirmation first before we pull the trigger. All right. So if there aren't any questions about these setups, what we could do is go to our first pair we're going to do top-down analysis on. It's pretty simple. It's one of the simple ones. I decided, let me just talk about this because it could help even those who may not know how to do top-down analysis. But let's go to the Aussie CAD. Well, yeah, and for this one, let me go to the weekly first, and then to the Aussie CAD. Weekly chart and Aussie CAD. All right. All right. So right now we're looking at the weekly chart of Aussie CAD. Let me remove this right now because we don't need any of this stuff now. But what we can clearly see here is on this particular chart, we see that price after sliding lower, started to still slide lower during this part, but you could tell momentum was weakening. Price broke to the upside, but then now we had a strong correction, which really turned into an impulse. And we see right now that price is testing an area of weekly support. If you look left, you can see it pretty clearly. Let me just drop a line right in this area. So right around here, we could see it. We could look left and we could see that on multiple occasions, price respected this area right here on this weekly candles, right here. You guys get the point, even right here. But you guys get the point. On multiple occasions, price came, tested the zone, and reacted to it. So then, we're expecting a reaction also on Aussie CAD from this area as well. That's what we're looking for as well. A potential bounce to the upside on this particular pair. But what we're going to do from here, we're going to drop down to the daily chart. So let's do that. Let's drop down to the daily. We can see that the weekly is almost oversold. It's not oversold yet, but almost at that level, the 20 level. So let's go to the daily. All right. So right now we're looking at the daily chart right now. What we can see is that price gave us a nice expansion to the downside. If we was to take our tool and we measure this move right here from this previous leg, from this high down to this low, and we drag it up to the highs right here, what we can see is that price is pretty much giving us a one-to-one measured move to the downside, right into this support area. Remember, look left, structure leaves clues, but we can see that price gave us a harmonic move to the downside. We can look to see that stochastics is also oversold. So then that's a reason to look for a potential buy. And if you look at the candles right here at this area of support, what is it that you think may be taking place? Something could be potentially taking place. We can see it from here. But what may be taking place based on how these candles are forming? Let me ask you this question. Well, we still need more price action. We don't know yet. I'm not going to jump and make an assumption yet. We still need a little bit of more price action, but there's a possibility we can get a break, a push to the upside and a break and close above this level right here. That's something that we could definitely see on this particular pair. But yeah, so then what I'm going to do is mark two areas. I'm going to mark this area right here, and we're going to mark this high right here, because if price breaks this high, then we could see a potential move to the upside, at least to test this high. So in other words, if we see price break this high, wait for the pullback. We can do this on a smaller time frame, wait for a pullback, and then maybe trade it to this high. That's something that could very well take place. But anyways, let's zoom out. Let me zoom out. And from here, what we can do now, we don't really need this. Drop down to the 4-hour. All right. So right now we're looking at the 4-hour chart. So then what do you think is forming on the 4-hour right in this area right here? I'll give you guys a chance to chime in. What could be potentially forming? So, it's pretty simple. We see a what? What do we see down here at the lows or at support? I know Jesse said inverted head and shoulders. No, but we do see consolidation. So then that's probably what you're seeing. But to simplify it, what we see is a double bottom. Left bottom, price pushes up, comes back down, retests the same area, and now it's up. Even though we see a lot of indecision candles on the way to creating this double bottom, it's still a double bottom. It's still a double bottom, but you identified what we're seeing to some degree. Even though you said inverted head and shoulders, which it's not really an inverted head and shoulders. It could turn into one, but it's not one now. what you saw was consolidation or bottoming at this area of support. So then what we're going to do is simply wait for price to break to the upside. And this is what I'm going to do. I'm going to wait for price to break to the upside. And from there, we're going to wait for a pullback to retest. This area, what was once resistance, becomes support. This neckline area will become support or structure. And then from there, we could trade this to the upside and trade it to this level right here. Because remember that last daily candle high prior to Friday's candle was right around here. And we could see price stop or pause right around there. So then let me just do this right quick. Let me draw this all in. So this is what we have. We have a break to the upside, pullback, and a possible expansion up to this particular area right around here. So, and if you look left, you can see that this area is an area of structure as well. Look left, structure leaves closed. So you can say that somewhere in this particular area is where we could expect price to fall after pushing to the upside. So again, this is Aussie CAD. We're looking for a reversal on this pair to the upside. And really, for a lot of your commodity type currencies, we should see 4-hour breaks to the upside. We should even see that on the Aussie USD. It's the same type of analysis to some degree, but even on the Aussie USD, you should see a potential break to the upside, and that's what we're looking for even on this particular pair. Let me remove some of this stuff because it could get kind of confusing. But what we want to see is price break this area to the upside. If it breaks to the upside, this zone, then we'll look for an opportunity to sell. I mean to buy. So yeah, we probably could have gotten in on this pullback right here. The reason why is because if you look at this area right here, oops, let me remove that. But if you look at this area right here, we see what appears to be right here in this area structure, but hidden structure right in this area right here. You know, some people call this an order block. I call it hidden structure or a hesitation area. But price came right down to this area and then popped up. So you know, we could have entered our trade right around there because we were expecting this move anyways. Like we've been expecting this move for quite some time, and I'm glad that we're starting to see it right now. But what we believe is going to happen is that price is going to break to the upside. It may find resistance up here at this institutional level, and then from there we'll see price correct, retrace. It could give us a deep retracement too, maybe even down to this area, and then from there we could see the expansion higher. So yeah, this is the Aussie USD. It's quite similar to, you know, what we're seeing on Aussie CAD, but yeah, this is something that we'll be looking forward to as well. This type of setup forming on Aussie USD. Because, you know, really the dollar, you know, we've been waiting for this dollar reversal for a while as well. The dollar kept climbing higher and higher and higher with no type of breathing, no type of resting, no type of pullback whatsoever. It was going higher and higher and higher. So then, you know, we're due for a decent correction, even on the dollar. So that's why we're anticipating, you know, US dollar weakness, even though fundamentally, you know, we're in an environment where, you know, they're considering raising interest rates. So, but yeah, we mainly look at the technicals to determine what to do. And technically, this is the setup that we definitely want to look at. The chance to sell US dollar, but to buy Aussie dollar, the Australian dollar. So yeah, and just like Marvin said, that Aussie dollar could be benefiting due to the recent update in regards to China slowly moving, you know, unlocking, slowly phasing out from that locking phase. So then that could contribute to the Aussie strength that we're seeing. But yeah, so then we see Aussie USD 4-hour break to the upside, pullback. but we also see it on NZD USD, which I think maybe even slightly better. I'm not sure. Let me see. Yep, it gives us a nice double bottom. We're actually testing the highs right now of this potential double bottom type scenario. So it's the same way with you know, Kiwi USD. If we get a break to the upside, then we'll definitely want to look for an opportunity to buy. And this all makes sense when you do top-down analysis. Like, as a matter of fact, let me just do that right quick. I'm just going to do some top-down analysis. Let me hide this on the higher time frames and then show you why we're looking for what we're looking for. Trading is all about doing the same things over and over and over again. And once you do the same things, you'll start seeing the same things over and over and over again, and it can give you more confidence in your buys and your analysis. So all right, so then this is the Kiwi USD, and what we're doing right now, we're looking at the weekly time frame. If you look left, we could see that, well, for starters, price is testing this institutional level or zone around 62 cent, the flat 62 cent area, or 6200. So right around there. Let me modify this a little bit, make this 62 cents, and we can change the color to white. But yeah, it's testing this area right here. Let me remove this. I don't want to confuse you. All right, so it's testing this area, and if you look left, this whole entire zone and area is an area of support, weekly support. As a matter of fact, we can probably drop another line, right around here. And let me change the color of that to yellow. So then, we have this zone right here that price is respecting. And also we see that stochastics is oversold. So then we see that price gave us this nice impulse. Stochastic is oversold, and I believe it's a measured move as well. Well, we could see some harmony, even though I know for those starting off, they may not be able to see this like we will. But yeah, it's a little bit above a one-to-one measured move. But what we can see here is that price is definitely pausing, right around this area. So what we want to do is look for an opportunity to buy now, but we can't just assume that price is going to bounce. We need to wait for confirmation. So that's exactly what we're going to do. We're going to look for confirmation. But anyways, let's go to the daily chart. All right. So then right now we're looking at the daily chart. Let me remove all of this stuff. This was from one of our other trades that actually hit the target a while ago. But all right, so then we see that price gave us this nice impulse to the downside, and I believe this is a 236 measure move. Let me see. Well, yeah, I believe it is. I know we don't have the 236 level on here, so I'm not going to do that yet. But what we can clearly see here is that price is somewhat consolidating, and we know that by how are the candles moving? These most recent candles. Are they moving up? Are they moving down? Or are they moving sideways? These most recent candles, you can say right here. Are they moving up? Are they moving down? Are they moving sideways? Because that can give you a clue on what you may need to look for. And as you guys know, I think it's pretty apparent, they're moving sideways. You look at this from the 12th. You can see that, on the 12th, price gave us a bearish candle. Then we get this bullish candle on Friday. And price is still maintaining this range. So what we can easily do is identify the high of this range, which is, I don't know if you guys can see it, but we drew this before, but it's right here, right around here. Let me change the color because I don't want to confuse this with what we have on the other time frame. But we see this high right here. Price breaks this high to the upside. The high of this range is this red bearish candle. This is what we call the mother bar. And once price breaks this high, then we'll know for certain that we're seeing a rotation to the upside. So anyways, let's zoom out. We have this high of the mother bar right here. The price breaks that high, then we'll be looking for an opportunity to go long on a pullback. And as you guys can see, voila. Which is, I'm glad that we drew in this line, because I don't know if this ever happens to you, but does it often happen from time to time where you see a price break through the neckline of a double bottom or reversal pattern, but then price goes all the way back down and continues to trend? That sometimes happens. So what we can do, we can have another clear set of rules and say, hey, I'm not going to go long until I see a 4-hour break of this cyan line up here. So, you can give yourself that extra filter, you could say, that extra confirmation, and not go long until you see price break this high. So in other words, the real zone may be from here to here. The real zone that price may have to break. Does that make sense? If not, then I can explain it a little bit more. But if we see price break this to the upside, then we could be more confident in our position to buy, in our rotation to the upside. Look for price to retest this area, what was once resistance becomes support, and then we could look for an opportunity to trade this to the upside. We can use the distance from the bottom all the way up to the neckline that could support our particular decision to buy. And as you can see, that takes us right into this area of structure right around here. Look left, structure leaves clues right around here. So yeah, that's a good area to look to buy around, right around here. So yeah, this is the Kiwi USD, and this is something that we're looking at on the 4-hour time frame. So yeah. All right. Are there any questions about this particular setup before we move on? Going once, going twice. Okay, let me see if I can do one more. And well, I think I'm good. Also, yeah, the yen pairs, we should see a rotation to the upside as well on those. Let me go to Kiwi yen. I'm just gonna do Kiwi yen, stay on the 4-hour, and yeah. So yeah, we're seeing the same thing. We should see a break to the upside soon. We just gotta wait for price to break this high up here. But it's always good also to confirm on the daily how that's looking, if there's a mother bar that's forming. So let's see if that is the case. Let's go to the daily. Okay, so on the daily, our mother bar will be this bar right here on the daily. But yeah, which means if you go to so then the high of this daily bar, which creates the range from Thursday, is right here at 81.91 or 81.92. So if you want to be extra careful, you can always wait for price to break this level right here, which makes sense because that's where the previous structure low is, this previous structure area. So you can do something like that where you wait for price to break this high instead. But we do have this particular possible bottoming setup scenario taking place. So anything can happen. But let me place the pink line right here. Pink line. And what we can do is simply just look for the expansion and the pullback. So again, break to the upside. If it breaks this level, then that'll be great. We'll definitely be in a bullish environment. Look for the retest. What was once resistance becomes support and push to the upside. But yeah, it's pretty simple. Very similar to what we saw on the Kiwi USD. But yeah, that's pretty much it. I can always go over more and more scenarios, but I think that's it as far as top-down analysis goes. But let's review those other setups on the Euro Swiss franc and on CAD Swiss franc. We may not be able to enter those, but let's see. So let's go down to the 1-hour chart. So yeah, it does look like price is respecting this high up here. So then we could see a move to the downside. But I would like to see the 38.2 triggered. It's always best just to wait for a 38.2 retracement, even though If you drop down to your trigger time frame, there's a possibility you could see signs of some type of reversal. But it's always best just to wait and just to wait for price to hit this level, because truth be told, we really don't know. Price could be consolidating in this range before it breaks to the upside, or price can be consolidating in this range in order to break to the downside, give us another retest and another push to the downside. So, we just have to adapt to whatever the market gives us. If the market breaks to the upside, then that's fine. We'll know what to look for. If the market breaks this consolidation to the downside, then that's great. We'll definitely wait for that 3-wave pullback. We'll wait for, leg A, leg B, and leg C, and then look for our buy. But yeah, that's what we'll look for on Euro Swiss franc. CAD Swiss franc, very similar. It looks like price may want to break to the downside as well. If we do see that 3-wave pullback, even on CAD Swiss franc, where we get leg A, leg B, and a leg C into this zone, then we'll look for a buy. Same scenario, but slightly different. All right. So with that said, let me ask you guys this question. Are there any assets, stocks, commodities, currency pairs that you want us to take a look at? Just let me know, because now is a good time to ask whatever question you may have on trading your particular asset, or the pair that you're looking at, or the stock that you're looking at, the commodity that you're looking at. Now is a good time to ask us any questions that you want, because we're here for you. Our job is to make sure that you know how to analyze the market correctly and know how to execute properly. So yeah, I'll give you guys some time, but if not, then we can definitely call it a day early. I don't know, Marv, did you have anything you wanted to talk about?
Well, not really. I think, this is just like your typical Monday. I think after having such a strong close on Friday, even though the week closed negative, we've been actually seeing 6 consecutive weeks, I think, of closes, right? Like I know in the S&P 500, like I think for the past 6 weeks, like 6 consecutive weeks of negative closes, which is pretty interesting. Like it hasn't done that in decades. Like this is the first that it's done it in a very, very long time. So then it's causing some traders to be on edge. But of course, with trading, like you guys know that we can benefit on both sides of the aisle. We can benefit as buyers of the asset, or we can look for opportunities to short the asset or short the security. So then we just got to go with what is given to us in these markets. And of course, this is a strange environment. A lot of our traditional correlations are sort of decoupled and broken apart. I mean, they agree from time to time, but like the textbook fundamentals, textbook economics don't work like they used to, or don't agree like they used to. So we're left trying to figure out how to navigate this type of new terrain that we're in. And really the result of these new market conditions is really what central banks have been doing. Like for the past decade, they've been pretty much pumping stimulus into the market, injecting the market with all of this easy and free cash. And right now things are so out of whack and disjointed that it's kind of hard. Like this is new territory for the Fed, new territory for most central banks. So it's going to be interesting to see how we come out of this conundrum, or this season that we're in. But for the most part, that's pretty much it. Like I don't really have any major trade ideas set up. I don't know, Melvin, do you have anything that you want to talk about, or
I guess we're fine. There's always opportunities you can look at, especially when you're scalping the market. And there may be cases even in the upcoming webinars, especially in the future, where we would look for scalping opportunities just to get your feet wet and just to do something while we're here together.
Yeah, and that may be, especially the case for the summer months. Like I know for the summer months, when we deal with summer volatility, um, you know, there may be more opportunities for you to scalp in those type of market, or trading conditions. So then, we'll discuss that in the next coming weeks. And yeah, we're just gonna try to figure out how to, because we don't want to load too much on you guys, but we may have to do some special sessions just on scalping alone, just getting in and getting out. But yeah,
Yeah.
that's
Yeah. All right. So with that said, I guess we can end today's session. Thank you guys so much for coming to today's live trading session. We really do appreciate you guys. And today's a slow day. I'm not really expecting much today. So tomorrow we should get right back into the groove of things, I believe. But I think we do have some announcements coming out as well. So you never know. But thanks again for coming, guys. We really do appreciate you. And as always, remember to always count your blessing, not your pips. And we'll definitely see you guys soon. Stay blessed, stay encouraged. And yeah, that's pretty much it. All right, guys. We will definitely talk to you guys soon. Have a wonderful rest of your day. And just relax and enjoy the fact that, you're here, you got breath in your lungs, God is good, and all that good stuff. All right. Talk to you later. All right. Okay, bye.